Okay, today I will cover on IFRS 15 revenue. The important here for this topic, you need to know the basic principles of revenue. What is the basic principle? You're talking about when you want to recognize, revenue. So the basic principle here is once the goods or services has been transferred to your customer. Or another principle, the same concept. This is the main basic principle should be in your answer. When you see the question is about IFRS 15, please remember you must put these basic principles in your answer. Another one, once performance obligation has been satisfied. I try to visualize these principles in this diagram below. Okay? Okay, class. This is your year end. You have to prepare an account for 31st December 2005 example. So now, in this case, the customer has made an order on 1st of November 2005, but the goods only deliver on 2nd January 2006, which is the next accounting period. So what you will do here now, class, in 2005 itself, can you recognize the revenue here or in 2006? Okay, so therefore, you only can recognize revenue in 2006. Why you cannot recognize in 2005, class? Because the order made in 2005. But you have to remember, you can't recognize it in 2005 because the principle of revenue, when to recognize the revenue here, once the good has been transferred or your performance obligation to give the goods to the customer has been satisfied. In this case, you can see the goods only delivered on the 2nd January 2006. Means that in this accounting period, you cannot recognize revenue yet. So just want to say here, revenue cannot be recognized based on order or based on deposit, but revenue only can be recognized once the good has been transferred or the performance has been satisfied, which the good has been delivered in 2006. So therefore, you cannot recognize revenue in 2005, you only recognize revenue in 2006. That is the basic principle for revenue. Next class, as you know, under the revenue, under this topic, I just want to share what is the issue that can be tested, alright? So I will give you several issue here. So the first issue, there are possible in your exam, is about deposit, non-refundable deposit. Or deposit, non-refundable deposit. Second is about principal versus agent. So you need to know, where is the, sorry. Okay, back to the page. Alright, principal versus agent. Okay, I think I need to, okay, principal versus agent. Another one will be your deposit, principal versus agent, sales and repurchase issue. I will go through one by one, alright? Sales and repurchase. Third, 5-step models approach. Lastly, class, that I will share to you will be the right of sales return. Okay, not only that, a lot of issue here. They are possible as well under revenue issue. They will ask you about this consignment. Goods. So I will share to you each of these issue with you all later. So just a summary on this. And next, another one will be construction. How to treat construction contract. And another issue, there are possibles that can be tested in the exam, gift card or loyalty card. I think in your specimen exam of your SBR, you will see a gift card question as well. Loyalty or gift card. Or you also can put under purchase warranty. Also can be tested. So this is all the 8 issues that I will discuss in my videos. I will split the videos based on part. Alright. So for this first video, I will cover on first video that I will cover on the deposit first. Alright, and sales and repurchase. Now, deposit. Under deposit first issue. Okay, under this deposit issue, I give an example just now. On the 31st December 2005, the customer make an order. This is a scenario question. Customer make order on the 1st November 2005. Okay, and pay non-refundable deposit of 2,000. The selling price of the goods, I give an example, possible, maybe you are selling television, your business, alright, is 5,000 per unit. Okay, so you made an order on the 1st November, maybe it's customized television or customized equipment, any business, I don't mind. But the concept is the same, alright? So customer make an order on the 1st November 2005 and pay a non-refundable deposit of 2,000. The selling price of the goods actually 5,000. So the customer has paid to the seller of 2,000. So, the goods only will be delivered using same example just now on the 2nd January 2006 example. So what is the accounting treatment here, class? So as I mentioned to you, don't give the final answer. So you must tell me the principles of revenue. The principle of revenue here mention what? Revenue can only recognize once good has been transferred. So in this case, okay, in this case, the deposit money received 2000 should record as what, class? The 2000 should record as what, class? So now, ask yourself, I can't recognize revenue in 2005 because the good not yet been transferred. So what the best thing here is, you have received a cash here. Initial, you have received a cash of 2000, but you cannot credit revenue here because the good not yet been transferred. So you have to credit what, class? Good. You have tried to answer. Okay. Will be deferred income. Yes, you also can say that is a contract liabilities. As I mentioned to you, can you put liabilities without explanation? So you must explain this relate to the conceptual framework. Okay. So what I want to relate here, class? You have an obligation. Good. You have obligation to deliver the goods to customer. So that's why the 2000 recognized as liabilities first, because you have created the obligation to deliver the goods to customer. Alright, please class, please relate with definition of liabilities. Why you recognize liabilities? Okay, so this is your presentation in 2005. How about when how about in 2006, the good have been received by 2nd January 2006. What you will record, class, here? Relate to the conceptual framework. Good has been transferred. So therefore, you can recognize what, class, now? Very good. Revenue. Remember, just now, the selling price of, how much the selling price here? Hold on. As you can see here, the selling price here is 5,000. So this is your revenue. Okay. So your treatment will be debit. Okay. You want to say credit revenue first because you can recognize it. You must recognize 5,000 because the selling price is 5,000. And class, if the customer does not yet pay us because he just paid 2,000, what you have to recognize? If he has paid to us, you can recognize as cash. If he does not pay to us, you also can recognize as good, receivable. Another how many thousand, class? Sorry, it's not credit. You're right. Good. You must recognize it as a debit cash or debit receivable, another 3,000. Class, remember, in your previous last year in 2005, you have recognized a liabilities because it's an obligation to transfer. But now in this case, you have what? The good has been transferred. So what happened to your obligation here? Good. You can obligation discharge. This obligation discharge is what? The recognition liabilities under conceptual framework. The 2000. So that's why you now can de-recognize your liabilities just now, your contract liabilities. How many thousand you recognize just now? 2000. So now you realize debit liabilities 2000, debit receivable 3000. The yellow color is debit, the credit revenue is 5000 now. So this is the way to treat deposit issue. But we have another story that maybe we can share as well. How about if customer cancel the order? I don't want to buy, I want to cancel the order. Remember just now, we are talking about a non-refundable deposit here. So due to that class, if your customer cancel the order, initial in 2005, as you said that just now, you have debit cash, credit contract liabilities initially, because you didn't transfer the good yet. How about if the customer in 2006 have cancelled the order? Class, if the customer cancelled the order, means that you still can use the same concept. That means the obligation discharge. Obligation. Sorry on my spelling. Okay. So debit liabilities 2000, credit what class? Good, because you have cancelled the order and you assume that the 2000 cannot be returned back. That is considered as your income, so you can recognize the revenue as your income as well. You can recognize as a revenue, no issue. See, so we have two scenarios here. Either the good has been transferred or the customer cancel the order. So when customer cancel the order, you still able to discharge your obligation. Please, when you do your essay later, please talk about conceptual framework, the obligation have been discharged to the customer. So therefore, we can recognize the liabilities and you can recognize the revenue. So the story is like this. This is more on deposit issue. The another issue will be, I think I've teach this in my first video on the conceptual framework, sales and repurchase. Under sales and repurchase, Mr. A, example, Mr. Akbal and Mr. Amar. Okay, they are selling goods. Selling goods 2000, and you promise to repurchase it with the exercise price 3000. We should know in 1 year, when you want to repurchase it, I must sell back to you 3000. The market price will be 5000, the goods that you want to sell back. So Akbal recognize revenue 2000 because he give reason that you are selling goods. But remember, But you have to remember, based on conceptual framework, remember, you must be faithful representation. So when you say that, you must record substance over form. So yes, mentioned by Akbal, I recognize revenue because selling goods. This I can say is a legal form. But when I realize something here, this arrangement, they are trying to do a loan arrangement. It's not by substance, is a loan arrangement. Why, sir? CM, you sell goods 2000, okay, come. We try to do the journal entries. Initial should be debit cash 2000, you receive the cash. So we see, this is Akbar treatment. This is a correct treatment. Akbar tried to do credit revenue 2000 and they will pay back later by subsequently based on the case just now. You see, repurchase back. I realize here, okay, when you sell the goods to Mr. Amar 2000 and we will buy back at 3000, you are trying to do a loan arrangement because maybe I don't want to do liabilities in my books of Akbar. I'm worried my liabilities will increase, my gearing ratio will increase later. So to hide the liabilities, to hide my gearing ratio higher, so I try to do a transaction of selling goods. But actually, Akbar trying to borrow 2000 and pay back 3000. You see? So an additional of what class? It's an additional of 1000 good. It is a finance cost here. So, based on the correct treatment here, should be debit cash 2000, credit loan good is a liabilities. By substance, I realize it is a liabilities arrangement. It's a loan arrangement initially, not revenue. So by subsequent, so Akbar try to hide, it shows that they want to buy back only. Okay? By subsequent, debit purchase, credit cash. But actually, this is not the treatment. By substance, you will have a finance cost here. So, debit, finance cost, credit loan. Your loan will increase from 2000. How much class? 1000. However, if the question gives you the interest rate only, so you have to use the interest rate to calculate the loan arrangement using amortized cost method that I will teach under IFRS 9. Okay, the correct treatment will be loan arrangement. So I will teach later under IFRS 9 how to do the subsequent for loan arrangement if they give you the effective interest rate later. So the important you I just want to say, you have to record by substance. You cannot record sales, the revenue. That's why this topic is under IFRS 15. This is not IFRS 15. By substance, this is not IFRS 15, but you must apply IFRS 9. Okay, financial instrument loan arrangement. So, class, I have covered deposit. I'm done. I've covered sale and repurchase. That's all for today. Okay, I will continue to my next part video for other revenue issue as well. Thank you.